We have a recession around the corner. The prices are going to drop by the end of this year. This seems to be the hot topic everyone's talking about. I'll admit there's some scary thumbnails out there on YouTube, including my own. And I have to say, these titles are made to capture the audience's attention. Alright, I have a question for you. The Toronto Real Estate Board just released their real estate data. At the beginning of this year, the average prices were sitting around 1.24 million. In May, they came in at around 1.21 million. What do you think are going to happen to the prices by the end of this year? Comment below. Welcome back to this channel. My name is Sid Chandra, and I make videos about the Greater Toronto Area real estate market. I focus on facts and education. If you like this type of content, hit the like button below so it helps the algorithm on YouTube promote it to more awesome people like yourself. And if you haven't already, please hit the subscribe button. There's over 100 of us that watch these videos every time they're released. Over my many years of making these YouTube videos, our team has got to work with many of you on your residential and commercial needs. So if you like this type of video or want answers to your situation specifically, click on the link below to book a call with me directly to chat about buying a property, selling a property, or investing in real estate, or simply to just chat about real estate. Two other housekeeping announcements. I've recently started posting on Instagram, educating buyers and sellers about the current real estate trends. If this interests you, connect with me on Sid Chandra. For all my homeowners out there, would you be interested in a monthly market snapshot of what your property is currently worth? We provide a market update of what your property is worth every single month so you know how your asset is performing. We figured people get account summary updates every month on their stocks, mutual funds, etc. So why not real estate? That is exactly why this program was built. If you'd like a monthly market update of what your property is worth, click on the link below and fill in your information. I promise this won't be any spams or junk emails, strictly the value of your property every single month, or properties if you own multiple. I don't need to be the one telling you, because you already know if you're watching this video that we cannot make assumptions or any conclusions from just 5 months of data. But these stats are a good way to gauge whether it's a good time for you to enter the market or not. In a nutshell, the market has dropped month over month for 3 months in a row. However, the prices are up since last May, year over year. If we look at this graph here, we started last May with a high number of sales of 11,000, with an average price of 1.1 million. Then as months went by, we got to January of this year, where the sales drastically dropped to 5,000. The average price, however, was still at 1.24 million, slightly higher than last May. Why did the sales drop? It's very normal because we got back from vacations and spending a lot of money during Christmas and winter holidays, so less transactions tend to happen. Then something interesting happened. Notice how our sales peaked through February and March, and the average prices also increased drastically. And then we had the rate hike announcement. Everybody panicked, there was fear in the market, and all of a sudden, people that didn't have to sell chose not to sell or buy. So our sales again dropped significantly. And now we're sitting at around 7,000 sales in May. This is a clear indication of a slower market because buyers and sellers are fearful and choose not to transact if they don't have to and can avoid it. If we look at this stat straight from the Toronto Real Estate Board, we can see that the same thing happened in 2017. Prices had skyrocketed and we had record-breaking sales. Then the foreign buyer tax announcement happened and prices plummeted and sales dropped drastically in 2018. This is where people freaked out, didn't know what to do, and thought we had a recession. But guess what? Prices went up more than 50% since. Unlike the 2017 market dip, we haven't quite seen a year-over-year price drop yet. We just don't have enough data. However, if you hold on to your investment for 3 to 5 years, you will always see major growth. I hope I'm painting a picture here for you to see the connection. Our real estate prices and inflation had hit an all-time high, and the government had to intervene, raise the interest rates to stabilize the market. We will likely see prices hover around the same range or dip in certain markets. On a short-term basis, this is very normal for prices to fluctuate. However, on a long-term basis, we will always see major growth, just like we did over the last many years. Let's look at the year-over-year average prices. We're up in all asset classes, as you can see here, so we may not see a major crash, rather a soft landing. If you ask me, perfect opportunity for upsizers or investors who want to expand their portfolio. Like I said earlier, most people that hold on to their investments keep them for at least 3 to 5 years. If we look at this historical data, we can see for the last 5 years, the prices had gone up drastically. I agree that in 2018 to 2020, we saw prices hover in and around the same range, but then they did skyrocket, and that is likely what will happen in the next few years. If you are thinking of rolling the dice and timing the market for the prices to go down further, is it really worth it? You might be leaving money on the table in case we've already reached a rock bottom and now the prices are on an incline. It's always best to evaluate your goals and strategy when investing. If you're a long-term investor like myself, you'll always come out winning in the next 3 to 5 years. If you're a short-term investor or a flipper, it may not be an ideal time to invest. I love how Warren Buffett says it best. I'm going to play a short clip to show you exactly what I mean.
I really thought that maybe we were giving a little bit the wrong lesson because all the questions would naturally tend toward current events. And so this time I went back actually to 1942 when I bought my first stock as an illustration of all the things that have happened since 1942. We've had 14 presidents, 7 Republicans, 7 Democrats. We've had world wars. We had 9/11. We had the Cuban Missile Crisis. We have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war and that America would progress as it has ever since 1776, and that American business, if America moved forward, American business would move forward. You didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out. You didn't know the Federal Reserve would exist, whatever it might be. And America works.
As Warren Buffett says, look for long-term investments. You'll always win. For those of you that don't know, along with helping clients with investments, I am a full-time investor myself, and we just closed on our 4th multiplex BRRRR project. Just like many of you, I have to trade time for money. If I don't work, I don't get paid. God forbid something happens to me in the future, my income stops, and now my family is at risk. So in the past 2 years, I've been acquiring properties to build my passive income. I always focus on buying multiplexes because they're great for cash flowing monthly income, and they're easy to refinance with the banks once they're stabilized, or in other words, fully rented out. The idea of refinancing these properties is so you can buy more properties and build a passive income, so you don't have to work because you have to, but rather because you want to. Imagine getting paid in your sleep. That's what I'm talking about. If you're curious about what I'm talking about, click on the link below and I'll openly share my portfolio and my experience on buying properties. That's enough of me talking. If you like this type of content where I talk about market stats and education, comment below, like and subscribe so you're always informed when a new video is released. This is Sid Chandra and we provide results that move you.